Hey everyone, welcome back to the Silicon Jungle Chronicles podcast. Once again, I'm CheeTung and I'm here today with Joyce Zhang. She's the co-founder and CEO of Alariss. And Joyce and I met more than a year ago, and we've just connected and we had some mutual friends as well. And it's been really fun, like talking company building, talking everything from international expansion into the US, go-to-market motions, and so on with Joyce. She's such a ball of energy. Thank you so much for joining us, Joyce.
Thanks so much for having me, CheeTung.
For those of us who've been living under a rock, because you market Alaris really well, could you maybe just quickly share what it is and maybe why you started it?
Sure. Alariss is the premier global expansion platform. We're a one-stop shop for companies that want to expand, in particular, from outside the US into the US market to spin up a local sales or marketing team. And we have integrated employer record, EOR solutions, referrals to law firms, accounting. So it makes it very easy. And a lot of the reasons I started Alariss was because when I was in the opposite direction, I was born and raised in the US. I was helping American companies launch into other markets, and I was living in Asia, Africa, Latin America. I just found it was really hard to get up to speed quickly and to know who the right local players were. It wasn't like Google worked in all these markets, and you also don't want to trust necessarily the first result that you find in English on a Chrome browser. So it was a lot of just networking, understanding local labor laws, but ultimately finding the right partners for each of the areas that I needed, the right recruiters, the right lawyers, the right accountants, and then the very possible pitfalls of having the wrong people or the wrong advice and all the labor implications and all the business implications of that. So I really wanted to build a company that was technology focused, that allowed companies to do things in a remote environment, leveraging tech so that it would be affordable and fast, but also at the same time leveraging the best of local human ingenuity, because we really believe that global expansion is about thinking globally but acting locally.
Yeah, so I can resonate a lot with that, and I think all the listeners to this podcast and readers of the blog would resonate with that as well. I think this is precisely why I started writing the Silicon Jungle Chronicles because it's so hard. And you've been running this now, what is it, coming to 7 years? Would it be? Or six
Yes,
years?
yes, exactly. It's been a while.
Wow, okay. How do you still remember that journey to get your first client?
I do. You can't forget it. I think being a entrepreneur in any form is very challenging. And I have to give kudos to you, Chitang, and many of your listeners, because if you're an entrepreneur, but also at the same time a recent immigrant, you're playing it on extra hard mode because entrepreneurship is just playing life on hard mode. So I think if there's like extra hard mode, that's the one because you're just building a network, gaining credibility, not just with customers, but in a totally new environment and figuring out so many things at once. So really hats off to the tenacity and to the hard work of everyone who's listening to this podcast. Yeah, to answer your question about 7 years ago, what it was like, I started Alaris solo as more of a consultancy. And that was because back then I already started knowing that there was a general problem I wanted to solve. And in many ways, I'm lucky because I advise a lot of founders now. I'm in this lucky position to give them advice, especially on topics of go to market. That's something that I specialize in. And many times I have these really incredible founders who have a solution, a product they've built, and then they're trying to shop it around and finding a problem to solve, a hammer looking for that metaphorical nail. And I actually started with the problem and the customers, but I didn't know what the solution would look like, which is why it began as a consultancy. And that problem was when I was overseas, even though I found it very difficult as an American ex to build and expand companies in other markets, but I had a lot of things going for me. Namely, for many times I was representing large multinational corporations. That's actually what brought me originally to Singapore. I was working with Microsoft Singapore, Microsoft APAC. And so you have the credibility, the brand, you have a lot more capital and resources to experiment and to try things out. But many times startups are struggling for resources. They are very cash constrained. And on top of that, the reputation from their country to the US might not transcend. They might be the best company in Singapore, the best company in, Vietnam, but when they left their borders, it was as if all their hard work and all that brand building didn't really matter. I had a lot of friends in those countries that I was working with that said, "Oh, Joyce, you're in the US. Oh, you're in San Francisco, Silicon Valley. This is amazing. Can you help me connect to investors, connect to customers, find clients? So I knew there was a challenge here because things that I might take for granted, the resources I had access to, were just quite literally very foreign to them. But again, I didn't know what would be a productizable way to solve this pain point. So I started off as more of a consultant. I was doing some GTM and operations for companies, helping them set up, helping them scale, figuring out what is it I want to do? Oh, do I want to do like incorporation? Oh, no, Clerky and Stripe Atlas already exist. Do I want to do something that helps them with fundraising? There's already, AngelList and other platforms, plus fundraising is, again, not something very productizable. So much of it is very personal and bespoke to each company and to the investors who might be interested in them. So finally, the thing that I hit upon was the recurring pain point is all of them found it really challenging to build a US team because they didn't have a strong network. They didn't understand just culturally how to hire and evaluate and manage salespeople initially. There were just a lot of unknown unknowns. So I thought, at least this is a consistent problem that I'm hearing over and over again. So I can build a vertical labor marketplace of sales professionals that are pre-screened and vetted. And then after that point, also offer things that make that employment possible, holding money in escrow. So both sides had a chance to work together and have that intermediary so that they could start building up trust, and also payroll and the ability to issue tax forms. So all of those came later, but the core problem that I was solving and the core product that rose out of it and that I later rose funding for was this vertical labor marketplace.
Wow, that's quite a journey. I can completely relate to that initial chaos as a founder coming into the US, and that original problem statement that you had, that completely relates. You have this huge, strong professional network of customers, investors, and so on in your home market, but it counts for almost nothing once you come into the US, unless they themselves have some connections here. And so it sounds like definitely you were serving a hungry market, because these were founders who knew the value of bringing in a workable GTM in the US and figuring out how to do that. What do you think? What do you think are some of their greatest challenges? So you cover like even the administrative side of getting the company set up, the EOR side of things, the hiring and connecting them, but you also deal with the strategic side of things. So what would you say are the greatest challenges that your clients face, like trying to come into the US today?
I think the first and foremost challenge is getting up to speed on and learning as quickly as possible because time is money. And for many companies, whether you're venture backed or otherwise, usually spending in the US is just much more expensive. And there's always a limited run rate. And you have to figure out product market fit while building all the pieces at the same time. So the longer it takes, the harder it is. And many companies just either end up failing or giving up. And so they're always constantly battling against the pressures of time and finite resources. So then that strategy and prioritization, though, is very difficult when you don't know the market. You don't know where to invest your dollars, whether it's in marketing, whether it's in recruiting, brand building, et cetera. And then that leads to the next point. I think one of the other biggest challenges is that complete deficit of brand, resources, network. People are really just cut off and unmoored. So they need to build up all of those things as quickly as possible. So the hope for Alariss is that we can become that extension, that local team for them. We have an existing brand, we have an existing network. So if we partner together, we can quickly help lend credibility to them and get people to start helping them build and supporting them and building their dream. Because joining a startup founder early on as one of the first employees, especially the first in a new market, that's a huge risk. That's helping someone build their dream, but putting your entire career on the line. So it takes a tremendous amount of trust building and credibility to get that to happen. So our hope is to bridge that as quickly as possible. And then finally, I think a lot of it too is about execution and being able to iterate and test things out quickly. So the faster you can get up and running and start testing things out in the market, the faster you can get feedback and iterate. You're never going to get it right the first time around. But if it takes too long to even launch, then you're not going to figure out what you're doing wrong until it's too late. So I think many of these things should resonate because it's the same as launching a new startup from scratch. And many companies, I think what they fail to realize is when they come to the US in particular, it's like they're beginning all over again. It's like how oftentimes people might have the experience when they're in a taxi or Uber and they're talking to the driver and they realize this person is a medical doctor in their home country. They have a PhD. And the fact is they came here and they know they have to start all over again, make ends meet, put their kids in a good school. And then, of course, eventually there's that American dream. They really make it and things go well through just their hard work and their perseverance, and their kids get to really benefit from it. But the beginning is that almost like a cold start problem. So any company that comes here for the first time, they have that all over again. And again, our goal is to accelerate it so that they can start maybe not from zero, but from some starting point.
I think that also resonates very strongly with me. And in your experience, or at least in my experience, like part of the challenge is just expectations, right? And you see the TAM and you're like, all right, let's go kill it. Let's go crush it. And then you're like, how long is it going to take? It's like, all right, give me a quarter. Give me 3 months. Or no, all right, the worst case scenario, 6 months. I'm going to crack it. And then obviously, well, in hindsight, obviously that doesn't happen, right? It takes you almost 3 months just to even set up appointments with the first group of possible customers, right? And then whatever your sales cycle is, takes some time to get through that. And so that period starts dragging on for longer. But what kind of expectations have you seen are with your clients that are reasonable? And then when Alariss comes in, how have you been able to shorten some of that time expectation, been able to accelerate their journey to getting into the US market?
So I think oftentimes exactly what you said, the expectation is that it'll take less time than it actually does. And it can be many things. One could be you always hear the success stories. You hear about, oh, wow, look at this company. They launched, and then a couple of months later, they're worth $2 billion. And that's what always populates the news. That's what people hear. And so they think that's reality, or it is reality, but they think that's standard, but it's not. What the news doesn't want to say is, oh, look at the 99% of other companies in the world, which amounts to hundreds of thousands of companies potentially that are just small mom and pop shops, or they invested a little bit of money from friends and family or took out a bank loan, and then it took them 5 years to grow into profitability or break even. Those are not the stories that capture headlines. So I think there's a bit, I think it would actually serve us all well to set realistic expectations from day one for everyone, founder or otherwise, about what timelines look like. And then the next part, of course, is just because you get meetings with potential customers doesn't mean they're actually going to buy from you. So I think conversion rates are much lower than people expect. So many times customers, and again, this might be because they're overly optimistic, which they need to be. To be a founder, you have to be almost irrationally optimistic to take such a contrarian bet on your future with huge opportunity costs, because many founders have left really high paying jobs, they have very good careers, they had stable incomes, and they left all of that behind. So of course they have to be irrationally optimistic, but they sometimes make the mistake of saying, oh, wow, I have such a good pipeline. I have these 5 or 10 like enterprise clients who are interested. They've taken meetings with me. Gosh, I've gotten meetings with X, Y, and Z major logos. I'm set. One of them for sure will convert, and then that ACV is going to tide me over for the next year. And not necessarily. They could actually, none of them might convert, especially in the early days when you're still trying to figure out what is it that they want. How do you rank against the competition? Sometimes they just take meetings because it's interesting, it's different, especially for a while when AI was all the rage and every company had an AI mandate. They were taking a lot of meetings with companies, but it didn't mean they were purchasing the software. So I think that's another misconception. And then finally, I think a lot of times companies want to do things the scrappy way, which is really fair. Startups didn't survive by blowing money unnecessarily, but what works in one economy, especially in emerging markets where networks are tighter, reputations, again, matter a lot more, where the founder-led selling could get them to the first 1 million ARR very easily. When you no longer have that reputation, when the founder no longer has that kind of sway, doing it themselves can, again, it might not be the best strategy for the long term. Founder-led selling is important for validating the market, for making strategic decisions, for building empathy and really understanding the pain points of customers, but it might not be the most efficient for getting a foothold or even winning in a market. So I think having the knowledge of when it's the right time to ask for help and what strategically should the founder be delegating to others who might have more network, more experience, I think that's always a big strategic and very big emotional decision. So for Alariss, we've had many instances in which, for example, we had a founder tell us that they tried unsuccessfully for 6 to 12 months to close a deal or to get a salesperson or key strategic hire. And they thought that they had it almost closed and they went down the process for a long time. They held out waiting for the right person, the right deal, and then it ended up falling through and they felt they had wasted a lot of time. I think the way that we can help them shortcut that process is we're not guaranteeing that everything will work out 100%, but at least we can guarantee that within the first couple of weeks, actually usually within the first week, they can have some options to evaluate. Either those with experience, having sold to decision makers that they are trying to access, those who were decision makers, or those who are just professionals who are very good at getting doors open, that the founders will at least be connected to people who are just very on target and who would help them achieve their goals a bit faster and at the very least get feedback faster.
That's a nice segue actually to the next thing I've been curious about. What do you think is a good profile of a first US hire for an international company expanding here? Because I've heard so many things. Oh, just hire a bunch of SDRs, right? It's just like low cost, fresh out of college, like you just get them, just hit the phones, right? Or do you go the other extreme is, oh, get a seasoned like VP of marketing or seasoned VP of sales and then and then just get them to drive it. What's a good profile of a first US hire?
It really depends on the company and their circumstances, but in general, I would say that neither of those two profiles you mentioned are really the right ones. Junior SDRs, unless the founder has already found product market fit in the US market and knows exactly what they're going for and has exactly the ICP, and they just purely need someone local to execute and knock on doors. Again, if it's just dialing at this point, there's a lot of technology and there's also BPOs where you could just get someone else to dial. So it's usually more running the conference circuit or knocking on doors or whatever it is, or showing up to meetings where they might want to hire a bunch of local people just purely for lead gen. That could work, but that's very rare. It's very rare that there's such a perfect case of the product market fit coming that early. And the other one for the senior VP person, it's very, I think, oftentimes very alluring because a person comes with so much experience, they've seen it, they understand the industry, they have a really good Rolodex of contacts and connections. But usually there's a bit of a mismatch, and that mismatch comes in the form of compensation. The first US hire, many companies don't have the kind of budget to make such a big bet on just one single person because that one person could potentially be the same budget as many people, and there's only so much productivity even one highly capable person can be. But then the other part is that person is usually not well structured to be an individual contributor. They've been so used to being senior and having a team of sales directors and account executives and SDRs under them that they're no longer willing to put in all that grunt work for that long and to chase after commissions anymore because that's just not what they're best positioned for. They want to hire a team, train them, coach them, and get them to do that sales. What we usually like to suggest to many companies is that they should find someone who is an all-around athlete but who, of course, is very spiky on the go-to-market and partnership or sales side, and at the same time has enough flexibility and strategic thinking that they can shift gears and take on many different offerings. And that person, again, it doesn't really matter what their previous role was, but usually a full stack AE or someone who wants to get to the next level in their career is a good fit because their salary expectation isn't too high yet. They see this as a growth opportunity and a way for them to build leadership skills and for them to learn. They're a bit more patient because, again, the opportunity cost to them isn't so huge, and they're willing to learn and grow with you, as opposed to expecting you to give them the answer and have everything set up and ready for them.
Let's talk some numbers if we can, right? Is there like a salary range that you feel like it's a decent range that we should be looking at for like first-time hires? And how should your clients think about the ROI on this person? Because if you're a pre-product market fit, that could take a while before this person starts actually generating revenue. So yeah, maybe I don't know. If you could talk me through like how that looks like.
Sure. So this is another reason the founders should be the ones who are closing the first deals or at least trying to make the first sales, because they should have a good understanding and idea of the sales cycle and of the ACV and of how challenging it is and of what the major objections are. And they can make decisions about what products to build and what kinds of sort of white glove or bespoke services and support to offer clients if they really want to close those deals. So a lot of that will determine it. The great thing about sales is it's very metrics driven. So the ROI is quite clear, especially in the long term. A salesperson on a very basic level in SaaS sales needs to generate 5x the revenue of their base salary. That's just a rule of thumb. In today's market right now, I think it's a little bit tricky. A lot of budgets are a bit tighter, and so sales cycles are longer and so on and so forth. But in general, like sales is objective. It's about sales. It's about generating more money than you cost the company. And that's positive ROI. But at the same time, not every salesperson on a sales team will regularly hit or exceed quota. You have to set quota such that there is commission and upside for the salesperson, ideally uncapped. So they're incentivized to keep going and not to reserve leads or reserve quota for the next commission cycle. And it has to also be fair enough to make sense so that they don't get demoralized. So there's a huge art to setting compensation in sales in particular. So I don't want to necessarily say this is what every company should have, but in general, for let's call it B2B SaaS companies, maybe at seed series A-ish. And if they're trying to, again, hire, let's say in the Bay Area or New York versus if they're hiring in the Midwest, that'll vary. There are certain compensation benchmarks. So we usually see that for that first hire, usually someone should be at 150K base. We'll call it 120 to 200K base, but that also includes equity. And I say 120 is the minimum we would really suggest because people below that, they're quite junior. And if they're the first hire, they have to take on quite a founding, almost like a founder mentality. They have to feel a lot of ownership. They have to themselves have enough savvy and experience to really lend support to the founder instead of be a junior person waiting to take command. Sometimes you don't have that luxury of being able to tell them what to do because you don't even know as a founder. You want them to explore and be incentivized. And then that's the base salary, usually OTE or the on target earnings, meaning what they would get that's also including their commission. That might be another 100%, a standard for an account executive, or if you're seeing them more of a senior leader, then it might be a bit less, but then you'd be giving up more equity. So again, it really depends, but oftentimes I tell companies don't think about it necessarily in the whole year because you might not even survive that long, or that person might not be the best fit. Think of it almost as a monthly, just to make math easy. If it's 120K a year, then it's 10K a month. This is the base salary. Then you have to buffer on top of that 20-30% for things like health insurance and the taxes and other things that you should be providing. So that's base. And then in addition, if they get commission, there's that, but you should be happy that they earn commission because that means you're making money, you're getting revenue. So don't worry about the OTE. The base is what you need to make sure they at least cover. But if you feel confidently that, let's say, even in a quarter cycle they can close at least some deals in the first, let's say in the first quarter, they can at least close a deal or two that combined is in excess of 30-40K ACV, then it's okay, good. So table stakes, they've covered their salary. Now we have a little bit of room to explore and think about other things, and hopefully they'll keep on ramping up. But usually the ramp up period actually is 3 months. So it's not uncommon for them to close 0 deals in that period, but just having a very good metric for what are the expectations, what does success look like? And the founder at that point should also understand what's realistic. If I, as the founder, was able to generate this many leads and close this many deals in a quarter, but I'm also the founder and I'm perhaps the most compelling, I have a better network than others, with the caveat that maybe they don't have a good network locally if they're in a new market, then I will take that into account when evaluating this salesperson. But that's also why we usually recommend hiring 2 at once, not just one person. 2 at once, the best performer for sure stays. The person who's not the best performer, again, depending on how far off, might end up leaving. But that's another way to make sure to find the right person and to control as many variables as possible.
Right. So for clients who are planning on entering the US from international, they should at minimum be thinking about budgeting almost 300 grand once,
Well, that's why I said don't think of it as the first year.
right.
Think of it month to month because the US is at will employment. Of course, there should be longevity and long-term planning in terms of what the company is expecting and what they can commit to the person. But startups have to think about the fact that, again, if there's a mutual fit, if that salesperson is going to work out, if the company is going to work out, they'll usually figure it out within the first 3 months, if not even less time.
Mm.
And it would be amazing if they hired two salespeople and during that time spent the 60K, let's say, base in that 2 months time, and both worked out incredibly well. Then that's a no-brainer. Not only do you keep both of them, then you hire more people like them or with the same persona. But more often than not, one person might do fairly well, the other might not. And so then that helps the company evaluate, why is it after coaching, after a lot of support, that other person who wasn't performing as well just continued not to. Maybe next time around we avoid hiring people with that particular background or who came from that particular type of company. We hire someone who came from the background or the type of company that the person who did do well
Yeah.
represents. And if neither of them does well, then again, the company has to do a little bit of soul searching. Is it that they were the wrong people? Were they trained improperly? Is the product just not ready for the market? There's a lot more evaluation. But again, the hope is that both do really well, in which case it's not about budgeting, oh, am I spending 300K for the first year? It's more about what can I gain? Because sales is about revenue acquisition and about your risk or your investment and the risk you take being rewarded many times back.
Yeah. Well, the reason I say that is because, say, assuming the best case scenario is you see ROI within the first 6 months, right? Assuming you have a 6 month sales cycle. Oh, sorry, assuming you have a 3 month sales cycle, 3 month ramp period, you probably start seeing some revenue by Q2. And then if you have two salespeople, they'll put you out like 150 grand. And then that's the best case scenario. In an average scenario, one of the two would not make it. I would say I don't know. Maybe people are much better hiring than I am, but in the early stages, I found that's what you'll expect, right? And so that they probably drop out. You give them a bit of opportunity, 2 months, 3 months, and you're like, okay, this is not working out. And then you go into a hiring cycle again, and then that takes you another X amount of time. So for that first year that elapses, you probably expect between 200 to 300 grand as a investment just in sales. Like we haven't even talked about marketing yet. Ideally, that is something that as a founder you would have already gotten closer to product market fit, so you know what you're spending on. And so that total time that you take to get to that initial traction, like upward traction, realistically is almost like 18 months or 24 months. I don't know. Like that's
Right.
just the calculation I have in my head.
So usually, if possible, the founders actually should be the ones to figure out. I never want to call it product market fit because it's always constantly evolving and it's really misleading because essentially just a solo founder or the founder being the only salesperson and getting deals, it's almost like you're running a consultancy. You're the partner, you're the consultant, you're selling based on your own personal charisma and background or reputation. But how do you know that's repeatable or scalable beyond you yourself? So I never think it's true product market fit when it's just the founder doing selling, but I do think it's important for the founder to close the first deals to the point where the salespeople know what success looks like and what they should be going for. So at that stage, yes, it's a risk. Everything's risky. If it were easy, then everyone would be really rich. It's because it's not easy, and some people and many people fail, that happens. And so I think a lot of times it's the risk appetite. So even beyond being a founder, it's the risk appetite of like, how quickly do you want to grow? And some companies don't have that luxury. They just have to grow quickly. They raised a round. The investor sits on their board. They want them to grow. They're telling them, hire a bunch of salespeople, hire a bunch of marketers, hire a bunch of engineers. You need to try it out. You can't, if you're playing poker, you can't just bet one chip at a time. You have to go all in sometimes. Otherwise, what's the point? You can drag this out for another 20 years before you pull the trigger and decide to hire someone because you're so afraid of the cost. So it's just a personal decision. But yes, competing in the US is the most competitive and the most expensive market in the world to compete in because it's the most lucrative, it's the most valuable. There are no guarantees. I guess for us, it's just we want to help companies improve their odds of succeeding and also do it faster so that they have more likelihood of succeeding. Because the faster you can hire a salesperson, the faster you can tell if they don't work out. If you took 6 months just to interview and onboard someone, and then another 6 months to realize they were the wrong person, you're already a year behind schedule. But if you hire a salesperson, again, through Alariss or through someone else, and you can onboard them even on just a trial basis, on a month-by-month basis, within the first 2 weeks, then literally you can figure out, usually actually within the first couple of months of running this experiment what type of salesperson works, what doesn't, what kind of even like sales strategy works. And yes, marketing is can go hand in hand with that. I am speaking mostly from the perspective of working with clients for B2B SaaS companies where there has to be some sort of salesperson or human in the loop.
Yeah, I raised that point because I think as a founder going through it, having that mindset, like expectation, like before entering the US, like you have to budget a certain amount and you have to have certain expectations around time frame. And then
Right.
that's where Alariss comes in because exactly as you said, the time elapsed matters as much as the actual money and cost investment. Because if you spend this 300 grand, but it takes you 3 years versus spending that in 1 year to get results, it's a very different dynamic in terms of the founder energy,
Exactly. Their
investors, and
opportunity cost too.
expectations. Yeah.
Exactly. I think so another misconception that many founders have, and because it's especially the founders we work with from Asia, there's this very strong cultural element of 吃苦, eating bitterness. Founders they just think of their own time almost subconsciously as worth nothing. They are willing to work all hours of the day and night, all the time zones. They're willing to take the customer support calls. They're willing to and it's wonderful. And I think there's a time and place for it, especially in the early days when the company is facing existential, what are we doing? What are we here for? Is this worth it? But then when you're scaling a company, that is by definition unscalable. The founder's time is not infinite, and the founder's time is actually pretty valuable. It's not worth zero. And so the founders think, oh, I don't want to spend 150K or 300K hiring these people. I'm just going to do it myself. What they don't calculate is what is the fair market value of their own salary? Because at a certain point, past the initial startup stage, when it's really scaling stage, the founder should actually be thinking of their salary as what industry would pay them. And most founders that I know, many founders that I know, I should say, their market rates are probably more than 300K a year in the US. They could easily get a job because many of them have impressive backgrounds. They could easily get a job that would pay them that much, if not more, and they probably would have better work-life balance. At a certain point, the longer it takes, the more the founders need to think very critically of, is this opportunity cost worth it? Wow, I just took 3 years not hiring anyone, doing it myself. That's basically 900K if I were paid my market salary per year.
Yeah, absolutely. And I feel like this is a conversation that could go on like for a long time, and maybe we should do this over wine some other time. But we're running short on time for this particular show. But maybe if you could just share very quickly, like how should someone find you? Anyone who's listening who wants to find out more about what Alariss does, what's the best way to reach you?
Sure. Please just add me on LinkedIn. My LinkedIn name is Joyce Zhang Gray, and or come to our website, Alariss, Alariss.com, and shoot us a note. Would love to be connected and love to be helpful to you.
Awesome. I'm going to put that in the show notes so that everyone can see that. And I'll post this on LinkedIn and tag you as well. So thanks so much for taking your time today, Joyce. Really, I think we packed a lot of information into a really short period of time. So thank you for sharing.
Thanks so much for having me,